Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on June 6th with a Forex trading market analysis and cryptocurrency trading analysis for you for the week of June 6th through June 10th. Before we get into it, we just want to remind you with our disclaimer that this is for educational purposes only. Alright, and if you haven't done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, and without further ado, we are going to get to our live action screen here. All right. Okay, so we have the forex-trading-unlocked.com website pulled up here for you. And we already have a workstation page pulled up from the tab here. And we're going to skip past the numbers and check out what's going on in the Forex market environment. All right, so while you're out there, if you are watching us on either YouTube or on Twitch, just make sure to give us a little shout out if you wouldn't mind. So, and gives also a little look into what is going on with your trading as well. Give us some questions if you don't mind as well. So, all right, now let's see what we got going on here. All right, so on Twitch, do we have anybody joining us yet with any questions? Or on YouTube? Just want to check before we get into this. All right, so for the Euro US dollar, as you can see, this market has been trending much, much lower. Excuse me. And also, if you will check it out here, you can see that it is wedging. So we have a downward sloping resistance line keeping this market intact. We also have an upward sloping support line that's trying to keep this current correction intact. So the question is will this be able to survive? And to be quite honest with you, I think that it is running out of gas right now. So I don't know if any of you are trading the Euro US dollar currency cross, but if you are, give us a little shout out, whether you are long or if you are short, and what you think about it as well. So, because we'd like to hear from you while we're interacting. Remember, sometimes questions you have or that others have will be asked by somebody, so please don't forget. Hey, we do have somebody on YouTube saying hello. Hey, AJ. I hope things are going well with you. All right, so we have an upside breakout target zone and we have a downside corrective target zone. So to the upside, should we get above 107.92 area here, that would confirm higher move highs, extending this current correction up towards that 109.37 area to the 110.14 area. Now, I do believe that this is going to cap any type of extended rally. We do know that with the rising interest rates in the U.S., that it is very unlikely for the Euro US dollar to gain much strength until the ECB starts to get on the same page as the U.S. when it comes to raising rates and defending their currency also as well. So, very interesting stuff going on here. All right, so once again, above 107.92, if we can get back above this area, it confirms higher move highs, and also has us targeting this area up here, and we do believe it will cap that. Now, a failure from the low set a few sessions back here at 106.27 will have this market leaning on 105.67 down to 105.15. This area here is a downside corrective target zone. If this market is trying to turn around and become a bull in the longer term, this is about the extent of what we will see. If we fail from about $1.0515 area in this, from this level here, I would be very mindful of trying to not catch a falling knife here. If you're buying into this slide, I think you're going to be really on the wrong side of a freight train. So let's see, does any of you guys have a comment here on Twitch or on YouTube about this Euro US dollar? Okay, looks like you guys aren't trading that cross. All right, so then we will do this real quick. We're going to share this link here out onto YouTube and also out onto Twitch to people just to let them know. And if you don't mind, if you're watching right now on YouTube and Twitch, to share this out there, it would be really appreciated. All right, so back to our analysis here. All right, now let's go to the British pound, US dollar. All right, British pound US dollar is also wedging here. We have an upside breakout target zone and a downside breakout target zone. I am very leery of any move that can get above $1.2670 right now. I think it's very unlikely. However, if we do breach this level, that would confirm higher move highs, keeping this upside correction intact. Now, I do have $1.2931 up to $1.3091 up in this area as our upside targets. The pound is not as weak against the dollar as the euro is. So for this market to have an extended upside correction such as this would not really be out of the realm of being, which wouldn't be really a surprise, if you will. Main reason being is that the pound, the UK has its sovereignty back because of Brexit. Okay, so that's one of the main things that we know. Then we also have the fact that besides you have that, you have the interest rate factor that is weighing on it, but not so much like it is on the euro. The Bank of England is more on par with the Fed and most likely going to follow suit. Maybe not as aggressively, but it's very likely that they are going to continue to follow suit into the future. So, and another thing is that the UK also has oil. They're not in the position such as most of the European countries and the EU that right now are really in a world of hurt, basically because of the fact that they are energy dependent on Russia. So we all know about that. There's no reason to hackney that one up. So how do you like that word, hackneyed, huh? Word of the day, hackneyed. You heard it here first. So anyhow, but we do have this little range trade consolidation. You can see that today we are having more of the same that we had last week. Now, it was a rough trade for you guys out there last week. If you're British pound traders, unless you're a range, if you saw the range trade coming, you really had a really good, tough time at it. Unless you stuck to your guns and didn't do a thing, then you're pretty much where you were at most of last week. So it's very interesting to see how this is shaping up today, noticing once again that unlike the euro, the pound is stronger. So this is where we have the divergence here. Remember that that's why I say that this one could still have another run at resistance, more likely than the euro. Now, if we fail from $1.2464 here, well then that really has the British pound back on edge. I would be really careful of trying to buy into this slide should it get back down here. If we do start to hammer the support, I do believe we can make newer weekly lows down to $1.2102 down to $1.2102 down to $1.2034, somewhere down in this area. Now, I don't see this market selling off as much as the euro US dollar. Remember that it's not that the dollar is very strong right now, it's just that all these other currencies are just that weak. But I don't believe that the pound is fundamentally or technically as weak as the euro or the Swiss is. And speaking about that, let's just double check. Do we have any questions about the euro or the pound so far on YouTube? No, we don't. What about on Twitch? No, we don't. Okay, all right, well, we're going to continue on then to the US dollar Swiss. All right, so US dollar Swiss. Here we go. All right, so as you can see, the US dollar Swiss has had a balloon underwater type of rally today. Of the foreign currency crosses, this is one of the movers and shakers of the day. We really like this rally. I think that you found really good support last week. I don't believe that you're going to have the ability to hammer support like you did going into last week. I believe that now resistance is going to get its fair share of action going through the next few trading sessions. Does that mean we're going to rally all week? No, not necessarily. We could, but I think right now we do have a really strong chance at making an upside week happen and also trending higher for most of the next, I would say today, probably into Wednesday before we start to settle down as far as that trade is concerned. Okay, so we have the US dollar Swiss here breaking out to the upside. We took out this 96.63 level. We are making a higher move high on the daily and the hourly charts. That's keeping the short-term trend bullish. We are targeting this 98.06 up to 98.70 area. this is really significant, folks. Should we get above this area, we are parity or bust. This is no joke. I do believe that we will go back above parity. In longer run, I'm actually bullish this market overall. Until there's any type of change in the Russian-Ukrainian front or any type of major sell-off in oil, then I don't think that this market has a chance of becoming a bear for any extended period of time. But don't be thinking that you're not going to get away with swings. As you can see, this market had a lot of velocity, and then all of a sudden, boom, as the markets go in, they come out. We took off a lot of momentum, but now we're basing once again. Remember, the overall bull is driving this market. Okay, now, should we fail from the low set a week and a half ago at 95.44, this 95.26 area is another key pivot area. So really, you have to fail, I think, from 95.26 to confirm any true, really extended weakness. And if that does occur and we have sustained trading below 95.26, then I believe 92.85 is very, very likely to be a downside objective. But that would be only if I really believe only if you would have a huge, tremendous sell-off in oil and some sort of resolution, or at least some sort of, I would say, ceasefire going on between Russia and the Ukraine. So if you think that these things are possible, well, then, I mean, anything is possible, I guess. But then that would be what is needed, I believe, to have this occur. Okay, so now, will it occur anytime soon? That's where I have to say I'm very doubtful. To be quite honest with you, I have oil targeting more like, I think it's going to 150 before it goes back down to 75, and I think you can pretty much bank on that trend, at least, like I said, unless we have some sort of resolve that happens about, somewhere between now and the next few weeks. But do I believe it's going to happen? No. So I wish it would, and that would be great for all of us. But I do believe that we're going to have to be mindful of the fact and just accepting of the fact that we're going to be, in this mess for a little while yet. All right, so I'm going to post a link here for you for those of you that are on Twitch and YouTube. This is one of our little shorts. We'd like you to check this out when you get a chance, maybe after this video. So we're starting to do stuff on Discord. Oh, that's what I forgot. I knew there was something I forgot to do. Discord. All right, so you guys asked for us to be on Discord, and here we started doing it the last week and a half, and of course I start off the Monday without putting up stuff for Discord here. All right, well, now we're here, guys. All right, so for those of you on Discord, check it out. There's a link for you right there. All right, so back to the US dollar Swiss. All right, so we got those links for you guys. I hope you enjoy that. And also, we're going to give you another one when we get to the US dollar yen. So as we can see, we took out this high from the last week, making a higher move high, confirming the breakout. We are targeting, once again, this 98.06 up to 98.70 area. And I think that will be just the first stop on the way to parity. And then once again, our downside objective here should we fail. All right, now let's go to one of the other movers and shakers of the day, the US dollar yen. This is one that, we've been bullish for a very, 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 very long time. I think that if you're going to have any type of correction whatsoever, it would just be a profit-taking move. So let's talk about this one for a moment here. Okay, so one of the fundamental factors that's driving the US dollar yen trade, for the most part, truly is the fact that oil is accelerating to the upside. That is a big thing. The Japanese don't have the amount of inflation that we have going on in most other countries. They do as far as commodity pricing. However, that's really the only one that they do, because as far as when it comes to food, they're not suffering from the type of inflation that we're having in the U.S. and throughout the rest of the world, nor are they worried about food shortages. Remember that the Japanese do get a lot of their stuff from the ocean, for one, and that's where most a good chunk of their diet does come from, and they also have no problems as far as growing their own food as well. So when it comes to that, it's really going to be, they are at an advantage over many of the other, excuse me, over many of the other countries out there, including the United States. So this is something you should be aware of. I would say that, is it going to be sustainable if they're going to keep their inflation at bay? For the most part, relative to other countries, I do believe yes they will. So, all right, I just put down a link of a short that we put for this buy signal that we're about to talk about with the U.S. dollar yen. So now that you know the fundamental factors that are going on here, let's get into what is going to drive this higher. All right, so as far as upside projections, we had a weekly buy continuation signal that was confirmed as of the close on Friday. So if you notice how we had set this high up a month ago, and we had 3 weeks of lower trading action and lower closes. Okay, and then last week we had a monster rally. We had a bullish engulfing line. Now this is a double signal. It's a continuation signal that's composed of, right now, last week's trading bar was a bullish engulfing line. So that means that really has this market targeting higher levels and breaching resistance. Then if you take the four prior bars and add it to last week for a total of 5 bars, you have this market where it was running out of gas, peaking out, finally topped out, and then settled lower for 3 bars before exploding to the upside. And the fact that this signal at 130.81 was higher than these lower bodies here really confirms strength. Okay, so this is a continuation pattern, which if you go to our website, forex-trading-unlock.com, go to products, courses, and services, you go down to high probable Japanese candlestick patterns, and we have a whole page that describes this book. It has a video. You can also see part of it. You can preview it. You can share it, and you can buy it. Of course, we'd like you to buy it, and you can learn how to trade this signal. So, should we take out the low from 2 weeks ago around 126.41? That's what's necessary to really touch off any extended correction, which I don't see it getting lower than 125.12 down to 123.49, somewhere in this area here. This would be only if we would have a major sell-off in oil and for some reason a big rally in the U.S. Treasury bond market and 10-year bond note market. I don't see that happening anytime soon, but that's probably what would need to occur, or we need some sort of fundamental reason why the dollar would be under major pressure across the board, meaning like, well, I would regrettably say, but some sort of like a terrorist attack or something like that, because that would mean flight to quality in the bond market in the short run, because remember, the Swiss is no longer flight to quality. U.S. dollar yen, you can see the yen, there's no way that it can be flight to quality with this trend right now. It is so severe. Flight to quality can only put a cap on this U.S. dollar Japanese yen rally. I don't believe that it could really slow it down, though, anytime soon. I think we're going to see this trend continue for the next 3 to 6 months, and only once we get to some resolve. If we were to get, I mean, it would have to start literally within the next couple of weeks, have a ceasefire in the Ukraine. Should we have that? Well, then there's a possibility. All right, we have lots of viewers here. We have a couple more likes on the YouTube. Thanks, guys. We really appreciate that. And hopefully you're sharing it too. We would also appreciate that. And if you haven't subscribed, please subscribe to either our YouTube or our Twitch. And we did, hopefully through the chat, you're able to see those links for the shorts. So we have this buy signal, this weekly buy signal actually. We put a short out, and we'd like to have your comments on it. All right, so on the daily, you can see this a little bit more clearly what's going on. And once again, as far as upside, we are bullish, and I think that you can ride this trend up probably up to 132.5 before it's going to start to put the brakes on. I do believe that you're going to see a little bit of swinging back and forth over the next couple of sessions, especially as we stay above 130. 130 even was a line in the sand, which obviously the Japanese are not doing anything to defend their currency, but they could, and they could come in at any moment. Don't think they're just going to say, oh, tomorrow we're going to have an announcement. No, they're going to do it like Volcker from the U.S. Fed used to do back in the 80s and early 90s when the Fed just came in out of nowhere, even like within 20 minutes before the closing bell. So I would be mindful of that. Keep your stops tight. Look to buy dips and stay strong with this trend. Now, if and this is a big if the Bank of Japan, BOJ, does actually raise rates, or does something in the short run to help support their currency, that could precipitate a corrective sell-off. But it will not, I believe, hold in the long run. If anything, it would just set up the market for a correction and an opportunity to buy it down before you see it shoot back up to the 130 plus level. Main reason being is that the Bank of Japan right now has a current announcement that they put out that is sustaining that they will use unlimited purchasing power to keep rates at 0.25% in their bond market, in their treasury market rather. If that really is the case, and I don't even want to get into what unlimited buying actually is significant of, but if that's the case, how do you protect your currency when you're keeping your interest rates locked low? That is an impossibility to defend your currency, because one of the core factors of currency pricing is interest rates. So, and that being locked, I don't know how you're going to turn the Japanese yen into a bull when you're being bearish in your behavior. So that helps to support this trend. Be mindful once again of dips and look to buy into them, and use caution as we make new highs. Keep your stops tight. For transparency's sake, just like the US dollar Swiss, we are long the US dollar yen. We've been long this for months, since last summer. Any of you that have been following us and watch our videos know that's for sure, because we've been talking about it ad nauseum for a very, very long time. All right, real quick, let's check and see any questions on YouTube and Twitch. We do not. Okay, that is fine. Let's move on to the Australian dollar, US dollar. All right, we're only a few markets away before we get to the cryptos, folks. All right, Australian dollar, US dollar, poised for a breakout to the upside. Maybe, maybe not. On Friday, we did have a short-term sell signal. A little dark cloud cover right here, and as you can see today, we have a little follow through the downside. If we were to take out the high from Friday, it's around 72.86. That confirms that our sell signal is invalid, and also it confirms higher move highs, keeping this upside correction intact, looking to press the 73.43 area. I think it's going to run out of gas soon. I don't believe it has enough momentum to get up to 74.80, should it still keep on pressing through resistance, but we shall see. The slope of this upside trend right now currently is pretty steep. You can see we are playing with this upward sloping support line. If we continue to take out the low support, we need to take out the low from 2 sessions back here around 71.38. This confirms a neutral to lower trade, where I think you could see definitely momentum build. I believe you're going to have a lot of weak stops somewhere in this area, which will help propel it down to 70.56, maybe even down to 69.99 extreme. Now, should this market come back into this area, if it's only a correction, this is where you're going to see the breaks on it. Anything below this 69.99, basically 70-cent area, has this market really on edge, targeting not just the lows here from May, but targeting the 68 even down to 67.5 area. Now, this market has the potential long run to sell off in a big way. There's a lot of stuff going on with China where they supply stuff to China, but China is also not acting very nice with them. There was a military conflict over the weekend with some jets. So between Taiwan and now Australia, I don't know what China's endgame is, and I'm not even going to get into that in this webinar, but it doesn't look positive for the Australian dollar. So I would expect for this temporary upside correction that we've been experiencing over the past 3 weeks to run out of gas and start to hit the lows. And definitely if we fall below 69.99, I believe that the strength in this market is gone. New Zealand dollar, US dollar, as you can see, did the same pretty much thing as the Australian dollar did. This one I have really basically only one thing to say. Key off of the high from Friday around the 65.85 area. And that's where you want to protect you. If you're short this market right now, you probably want to have your buy stop in here as it grinds higher before it really starts to fall apart. But overall, we're bearish this market, and we're more bearish this than the Australian dollar. So if we do take out the low from 2 sessions ago at 64.62, look out below. I think that we're going down to the 62 even area, taking out this last monthly swing low from May. I believe that the downside momentum is that strong should you start to make lower move lows and lower move highs. All right, now let's take a look at the U.S. dollar Canada, which, boy, that was a grind of a trade a week and a half ago. And then all of a sudden it started to fall apart. Today it made a lower move low. It is higher relative to where it was most of the trading session earlier. However, I do believe that is more of a profit-taking move that's going on right now. You can see it's making lower move lows and lower move highs. It took out this support, this upward sloping support line, keeping this correction intact. Remember, we'd already been viewing this U.S. dollar Canada move over the past few months as a corrective rally. Now I think you do have a confirmation of weakness. That doesn't mean that we're not going to take out this buck 26.87 area and then maybe rally back up to 127.67. But I believe 128.29 here would cap any upside move. That doesn't mean that we're going to have this rally happen this week or anytime soon either. We are making lower move lows and lower move highs. We're trading below this upward sloping support line. As long as we stay below this trend line here, I think we're going to make a run for $1.2462. A failure here, look out below, baby cakes, because then we are really going to be pounding support. So I would be mindful, keep your stops tight. As far as if you're short, and especially if you get above $1.2687, you should not be short, at least for a couple sessions. Wait and see how high it can go. Look to sell rallies. That's right now our forecast, but be cautious with it. Now, as far as if you're trying to catch a falling knife here, I think you're really on the wrong side of things, because lower move lows and lower move highs are indicative of a lower trading market. Don't try and buy into this one, folks, unless you really have some sort of valid buy signal that you'd like to execute and manifest for yourself. All right, let's see. Do we have any questions on YouTube and Twitch? We do not. We do have a couple more likes. Thank you very much, guys. Hopefully you've been sharing and you've already subscribed. If you have not, hit that subscribe button and definitely share it to your friends. All right, now let's take a look at some cryptocurrencies. I know some of you, that's the reason you hang on. It's always the last one. Breakout to the upside today, baby. Look at that. We have a nice move, having Bitcoin looking like it wants to really start to break out to the upside. We're coming off of higher move highs after a higher move low. In the short run, the question is this a consolidation before we really break out to the upside, or is this a consolidation before we really start to slam support once again? All right, well, let's take a look at things here. So on a trend basis, let's move this. Sorry, folks. All right, on a trend basis, once again, here we go. You can see that this is kind of a 45-degree angle. Not a bad slope as far as if you want to maintain a trend. We like that. It's a Gann number. Works out well. But we haven't come into this downward sloping resistance line. We are wedging here. So that's a good question, is will we break out to the upside or will we fall back on support? And if we do, I do believe that should we take out this low here that was set back on, what is this, May 26th? Yeah, if we fall below around this 28,079, so basically 28,100 down to 28,050, or excuse me, yeah, 28,100 down to 28,050, somewhere in that area. If we fail from there, it confirms lower move lows and an extension of the bearish trend. If we take out this swing high from just a week and a half ago, around 32,539, let's get it a little lower there. There we go. That's still even too high. There we go. All right, so around 32,410. If we rally above that, that confirms a follow-through of strength, but that still does not mean that we are not just in a short-term correction to the upside before we fall apart. Now the question is, how bad is Ethereum taking this up? All right, so if you look at Ethereum, this one's not acting so much like Bitcoin is. It's actually basing here, but it doesn't seem like it really wants to perpetuate a true rally here. So once again, this one here I think is going nowhere. I would use a lot of caution buying into it at this level. Not to say that we're not going to break out to the upside, but I believe right now with the way it's been trending, lower move lows, lower move highs, except for the spike down here, this market looks like it's consolidating before it falls back on support. Should we get above the 2000 area again, then I think you can start to see a little building of upside momentum. But I think you have a lot of resistance here, especially when you go back. Let's look at the Bitcoin, BTC, USD. We have a little bit of divergence. This one has been trending kind of higher in the short run on a daily basis. And then ETH, USD, as you can see, it really hasn't. It's been lagging. So I don't want to say that Bitcoin has the ability as an index-like market to drag these others higher, especially Ethereum. Not that it doesn't or couldn't, but I think that that's where your false flag is. I think you have a little bit of a run-up going on in Bitcoin, and I wouldn't doubt that you see have a lot of profit taking coming really quick for someone who's just putting in a quick scalp, and I think that's where the money is right now in that market there. And as long as Ethereum's positive on the day, I think it's helping to maintain the rally in Bitcoin. But if Ethereum takes a nosedive and turns on support, don't think that Bitcoin is not most likely going to do the same. All right, now let's look at XMR US dollar. All right, we have the Monero. This one's had a nice rally while everything else was consolidated in the crypto space. Now you can see it's positive on the day. It's pretty much run out of gas, I think, on this correction. I think that if you have an extended move to the upside in Bitcoin, that Monero may press resistance up towards 220, 240 area, and then run out of gas. Right now, I think that as the whole crypto sector is under pressure, that's keeping Monero down. This has a fine value, anywhere between 180 and 220, where I think that it's a solid buy long term, looking to cash out somewhere between 280 and 350. Just because anything above 350, this thing really can't seem to maintain it, and most likely shoots it back down to the lower 200 area, like 220, 210, or even as extreme as the upper 100 handle, somewhere around 190 to 185. And that's a good scalp too, from that area. And even as you can see how this one extended down to 100, below 120, it was a bubble move. It slid really hard, and just as markets go out, they come in. You can see how much it retraced. And that's the key right here is, did we plant a nice low back there at the middle of May below $121, or is that just the target level that we need to shoot for? Because this market's in an overall downtrend, and which that is very likely. It could be the case, but right now, short run, we can see that we have a sign of strength. And let's go look at the Doji US dollar, because that's a little pet that some friends of mine are always like, what's going on with the Doge? Is it going to ever come back? Probably not. So you can see this one is higher. It looks like a shrunken down Bitcoin chart. And no matter what, this one I think has the more ability to slam support than it does to rally. Is there a trade here? I personally don't believe that there is, but there are people who really cling to this, and there's people buying it down like I can't believe. So I mean, yeah, if you liked, I guess if you liked it at 30 cents, you love it at 7 cents. So, yeah, good luck with that. So that's all we have to say about the Doji. Let's go back to the Euro US dollar, see what's going on there. As you can see, the market is a little bit lower trading than it was when we first started this video. Let's go back to let's see, Twitch. We got some followers there watching. We got YouTube. We got some other ones. Hey, we got another like. We really appreciate that one. Hope you like the links there that we shared with you for our shorts. Tell us how you think about that. We're just trying to keep on implementing these little changes and these little modifications to make you, the viewers, like what's going on with us. So, all right, so Euro US dollar, once again, this is where it's leaving us here. With just a slightly lower trade. Remember, the ones to watch right now, I think the next couple of sessions where you really have a chance to profit is the US dollar Swiss, which is already in breakout mode to the upside. Remember that we are long this market for transparency's sake, but we do believe that you're going to see a lot more action to the upside. We've broken out over the last couple of weeks range trading, if you will, that we've experienced with this market, and I think that the bulls are really going to take this one up. US dollar JPY, remember this is where the country wants to defend their currency, but they're not doing anything yet. So until they do, let's just ride this rally train higher and see how high it will go. Once again, 132.5 I think is a really good realistic number in the short run, and then any type of swings to the downside I think will be breaks to buy, at least until their Bank of Japan and finance ministry decides to do something, which until they do, there's no reason for us to pay attention to anything but what's going on right now, and that is higher trending markets. So, and with that, we want to just remind you once again to check us out on our YouTube channel. We got all kinds of playlists and videos. You can see our shorts. These are indicated with this, or our other ones, or other past videos. You can also go to our Twitch channel and check us out as well. So as you can see, here's a chat going on right there, pretty quiet, and we have now where you can see yourself. How about that? So, but anyhow, back to the U.S. dollar yen chart, so we don't want to confuse it there. But we want to thank you for all of your time today, and remember to check out forex-trading-unlock.com for all of your Forex needs. Peruse the toolbar and check out High Probable Japanese Candlestick Patterns, the book. You can check out a preview, and also if you are a Kindle Prime member, you can just read it. You don't have to buy the Kindle. You can just read it in anytime you want. So you basically own every book when you're a part of that, as long as you pay your monthly fee. So anyhow, I want to thank you very much for all of your time today. Once again, I'm Teddy Keckstedt from Forex-Trading-Unlock.com, and we will check you out.